Hi guys, this is Richard from the Stable Center, and today I will be covering Chainlink. Full disclosure, I do own Chainlink, but nothing I say in this video is financial advice. So today, publicly traded asset manager Caliber has purchased $6.5 million worth of Chainlink, not just as a speculative investment, but as a strategic treasury asset with real business utility. Unlike typical cryptocurrency purchases, Caliber plans to integrate Chainlink's decentralized Oracle network into its operations, using it to automate real estate valuations and streamline data flows. This move signals a shift in how institutions view crypto infrastructure, not just as volatile assets, but as operational critical technology. Caliber's CEO emphasized Chainlink's institutional adoption and real-world use cases as key reasons for the purchase, and the market responded with Caliber's stock surging over 300% in just a month. This isn't just bullish for Chainlink holders, it's a sign that Chainlink is evolving into the financial middleware of the future, bridging traditional finance with blockchain-powered automation. In other news, in a major leap forward for blockchain-powered finance, Chainlink has partnered with Korean fintech firm Suhu.io to launch Project Namsan, a pilot program enabling real-time forex conversions between Korean won-backed and USD-backed stablecoins using Chainlink's CCIP. This initiative isn't just a regional innovation native to Korea, it's a glimpse into the stablecoin SuperCycle, where programmable money begins to replace legacy systems across international borders. As governments and institutions race to digitize currencies, Chainlink is emerging as the critical infrastructure powering secure, interoperable, and automated forex settlements. With Korea now on board, Chainlink is proving it's not just a crypto oracle, it's the backbone of the next global financial revolution. Speaking of CCIP, Chainlink's cross-chain interoperability protocol is emerging as a foundational layer for the multi-chain future, and its metrics prove it. The total value of cross-chain tokens currently sits at a staggering $38.77 billion, representing the combined market cap of all tokens that are actively bridged across chains using CCIP. This figure highlights the scale of assets now relying on Chainlink's infrastructure for secure interoperability. Meanwhile, the total CCIP transfer volume, which is over $5.6 billion, shows how much value has already moved across chains via CCIP, reflecting real-world usage and growing trust in the protocol. As you can see on screen, last year, the CCIP cumulative transfer volume was just only $310 million. Fast forward to today, the CCIP cumulative transfer volume is over $5.6 billion, which is roughly an 18x from last year. Now, if only the Chainlink price could do an 18x, that'd be great. Anyway, moving over to the fees that Chainlink generates from CCIP, which currently sits at $1.39 million. This is indicative of the amount paid by users to execute these transfers, showcasing CCIP's economic activity and sustainability. In essence, CCIP is not just a bridge, it's a secure, decentralized messaging and token transfer protocol that enables smart contracts to communicate across blockchains. These metrics confirm that Chainlink is no longer just an oracle, it's becoming the middleware of the blockchain economy, powering the next wave of cross-chain liquidity, stablecoin expansion, and institutional adoption. So let's start the Chainlink analysis off with some risk and regression analysis. So if you take a look at the right-hand side of your screen, you can see various risk levels. The colder colors like blue and green represent times of low risk, which are the best times to purchase Chainlink. And the warmer colors like orange and red represent times of high risk, which are the worst times to purchase Chainlink. With the price of Chainlink nosediving off a cliff over the past few days, Chainlink's risk level has dropped down to 0.04, which is still insignificant and very low. According to Risk Analysis, buying Chainlink today is still considered low risk, not financial advice. So, moving on to the regression lines, which is just a fancy word used by mathematicians to say lines of best fit. The best times to sell Chainlink is when Chainlink is trading above the red peak regression line, indicating that Chainlink is overvalued. And the best times to buy Chainlink is when Chainlink is trading near or under the green bottom regression line, indicating that Chainlink is undervalued. Today, because of Chainlink's most recent price correction, let's focus solely on the green bottom regression line. As you can see on screen, the green bottom regression line throughout Chainlink's history has acted as support fairly well. If Chainlink were to continue to drop over the next few days and weeks, Chainlink would once again most likely find support at the green bottom regression line anywhere around between $17 and $19. Additionally, there have only been two other times in Chainlink's history where the price of Chainlink traded at or below the green bottom regression line. The first time being back in December of 2018 when the price of Chainlink was trading at 20 cents, and the second time being in June of 2022 when the price of Chainlink was trading at $5.89. We can also see that each time that Chainlink traded below the green bottom regression line and printed a pink risk level like today, Chainlink got a free ride to the red peak regression line. If this cryptocurrency market cycle is anything like previous market cycles and tops out in late Q4 of this year, we could definitely be taking a look at a potential $300 Chainlink by the end of the year. However, if altcoin season disappoints everybody, instead of topping out at the red peak regression line, perhaps Chainlink this time around tops out at the gray peak regression line, which gives us roughly a $125 Chainlink by the end of the year. Just a quick disclaimer, mathematical models are based off of historical price action, and we all know that history cannot solely be used to predict future price action. Okay, moving over to TradingView. It's been a hot minute since I covered the Elliott Wave count. Just a quick recap for this current bull market. I am tracking an overshooting B wave in a larger ABC flat pattern. Typically speaking, in Elliott Wave theory, an overshooting B wave typically tops out between the 1.236 and 1.382 Fibonacci retracement levels, which currently are located between $92.82 and $131.31. Now, zooming in, I am currently tracking a 1-2-1-2 structure. Let's actually draw the support level for white wave 2 together. So let's take a Fibonacci retracement from this local swing low to this local swing high and turn on the price levels. So typically speaking, wave 2 retracements in Elliott Wave theory bottom anywhere between the 0.382 Fibonacci retracement level and the 0.786 Fibonacci retracement level, which currently spans between $13.35 to $19.49. Now let's take things one step further in order to narrow down these support levels. So let's turn on our moving averages, as well as utilize our trend-based fib extension tool. So typically speaking, in Elliott Wave theory, the Fibonacci target for any three-wave correction is usually either at the white 1-to-1 trend-based fib extension level, which is currently located at $20.13, or the white 1-to-1.618 trend-based fib extension level, located at $17.34. I do want you to notice the confluence and the overlap of the white trend-based Fib extension levels and the blue Fibonacci retracement levels, because this will help us narrow down the support area further to give you more clarity. So the new support area now spans between $17.34 to $20.13. This is the area I expect the current Chainlink correction to bottom out at before the next parabolic move to the upside. Notice how the white demand trend line and the 100 daily moving average in orange are also located in our support area as well. This gives me further confidence in saying that the Chainlink correction will be over within the next few weeks and we can resume our Chainlink bull market. Okay, so let's close this video out by covering the long-term bull market price targets using Wyckoff theory. Okay, so Chainlink is breaking out of a multi-year Wyckoff accumulation, and I am expecting Chainlink to challenge new all-time highs for this market cycle. As you can see on screen, the second LPS, which stands for last point of supply, bottomed in August of 2024 inside our blue Fibonacci retracement support area between the 0.618 and 0.786 Fibonacci retracement levels. Fast forward to today, the third LPS has bottomed inside our blue Fibonacci retracement support area as well, once again, between the 0.618 and 0.786 blue Fibonacci retracement support levels. A last point of supply occurs when market makers absorb whatever supply is left on the market before the eventual breakout to the upside. Now, going over the bull market price targets really quickly. The first bull market price target for Chainlink is at the white 1.618 Fibonacci retracement level, located at around $60. The next potential price targets are the 1.236 to 1.382 Fibonacci retracement levels, which span between $92 and $131. If Chainlink blasts past those levels, the next potential price targets are the 1.618 to 1.786 Fibonacci retracement levels, which currently span between $230 and $342. And if we get super lucky, Chainlink can hit the 2.272 to 2.414 Fibonacci retracement levels, which are currently located between $1,087.69 and $1,524.07. All right, that's all I got for this video. Thank you guys so much for watching, and I'll see you guys in the next one. Take care.